Very interesting management, Puneet. Today we have the Managing Director of PG Electroplast, Mr. Vikas Gupta, joining us. Welcome, sir. It's an interesting inflection point, and for viewer context, I want to quickly take you through what PG does. So PG Electroplast basically is into EMS, which is electronic manufacturing. Of course, it's a hot sector at the moment. The stock also has had a hot run. It's been nearly a three-bagger in the last 12 months, so been very solid. What's it doing now? It's entered into a new partnership for assembly of EVs and lithium-ion batteries. What this means in terms of the company, how much in terms of diversification does this mean? And for that, we have Mr. Gupta, of course, giving us perspective. Welcome, Mr. Gupta. Pleasure having you here. Good morning. I want to ask you with regard to this latest partnership, what does it mean for PG Electroplast? Is it more of the same, or are you now going to, does this agreement mean that you're going to enter new products going forward? What does it mean?
Good morning, Harsha. It's always a pleasure to be on your show. Basically, please understand, EV is certainly a very exciting sector, and we are looking to see how we can get into that. So we have been working on that for last 6-8 months, and we have tied up with Spiro. Spiro is Africa's largest two-wheeler EV manufacturer, and we have entered into a kind of a manufacturing agreement with them. And we will be starting the manufacturing of two-wheeler EVs and the battery packs in maybe first quarter of FY26. So we'll be setting up a dedicated manufacturing setup in state of Maharashtra in our existing facility near Pune. It's a kind of a contract manufacturing agreement where the IP belongs to Spiro, and we'll be doing a kind of a prescriptive manufacturing. So we will be making an investment of almost around 25 to 30 crores initially, and that's a brief download on that.
Fair point. So just in terms of the investment itself, it's not significant. So I'm sure that internal accruals plus the fundraising you're doing should take care of it. But what does it do in terms of your top line, and how quickly are you going to be able to start churning out product from this as part of this new partnership?
So we are looking to start production, as I told you, in Q1 of FY26.
Right.
And we are looking at a revenue of almost around 500 crores in the by the second year of operation of this EV manufacturing. And going forward, we are also looking at localizing much more content domestically. And let us see how it goes. We are very excited and very bullish on this category.
Mr. Gupta, good morning, sir. It's Puneet this side joining in as well. Thank you so much for joining us today. Just wanted to take forward. So by FY27 is expected to be around 500 crores of revenue from this new venture with Spiro Mobility. Is that a correct assumption? And also, what is the kind of margin profile that you're targeting in this? Would it be somewhere around the 8 to 10% range once it fully the utilization increases? So for FY27-28, what is the kind of margin profile that you're expecting for this? And I also want to understand, is this an exclusive partnership only to PG Electroplast? So will you only be manufacturing this for Spiro in India specifically, and are they already present in the country?
Okay, so this agreement is an exclusive agreement. So Spiro will be getting their EVs manufactured exclusively from us only. On the revenue front, we are targeting to a revenue of around 500 crores in FY26-27, something like this. Based on the, we are already doing the number crunching, but we are hopeful within first 2 years we should be able to hit a revenue of 500 crores from this business vertical. Regarding the margin profile, please understand the margin profile of this business is typically like a electronic manufacturing margin profile, where the margins are in the range of around 2 to 3%. Around EBITDA will be almost around 3 to 4%. And but the asset turns will be quite high. We should be able to achieve an asset turns of around 10 to 15 in this case. So we are targeting a ROC and the ROE return ratios in the current levels of the company, which is around 20 to 25%. So we are targeting the returns ratios to be in line with our current business profile.
Fair point. Is this only for Spyro's India business, or do you expect opportunities that Spyro is tapping abroad as well to start getting traction from you? Is that something that you're looking at as well in terms of opportunity?
So Harsha, basically we'll like to go step by step in this. We will first like to establish a domestic manufacturing base. We'll try to see how we can scale up the volumes here, how we can build up those volumes. Definitely going forward, we'll look at the opportunities of exports as well. But currently, our focus will be on addressing the domestic market.
Now, Mr. Gupta, just wanted to understand, before we come to your Q2 numbers as well, correct me if I'm wrong, you have a board approval of about 1,500 crores of fundraise. Have you already launched the same, or are you looking to launch the same in this particular quarter? And just wanted to understand what will be the use of this, because will it be for capacity expansion, or of course will be used for Spyro as well? Just wanted to understand, because you have a decent facility of AC production units of about 30 lakh units. Your washing machine unit is also about roughly about 12 lakhs. So just wanted to understand on your fundraise, has it already happened, and what's the plan going forward with the same?
So, Puneet, we have taken an enabling resolution from the board, and we have taken a shareholder approval to raise the funds up to level of 1,500 crores. So we are just evaluating the various market conditions. We'll come back on that maybe in the later course of maybe in few weeks or a few months' time. Regarding our expansion plan, we have already a large capacities coming in line, and we see a lot of opportunities going forward in all our product categories. And we are looking to get into new product categories. So basically the objects of this fundraise will be to create a kind of a fund which will help us in harnessing the future opportunities. So we are further expanding our capacities in the existing product categories only. In ACs also, we are going for a new manufacturing facility and further expanding our annual capacities. In washing machine also, we are setting up a greenfield manufacturing facility in Greater Noida. So we have a lot of capex cycles going on. So the fundraise will be basically to help us in all those categories. Definitely the working capital intensity has also increased because our business has scaled up at a very rapid clip. So to fund our working capital requirements also, maybe we'll require some kind of funds.
Fair point. Let me try and break down how the numbers will add up maybe over the next 2 to 3 years. So currently you're doing around 2,750 crore of top line. This is FY24 end. Your guidance for full year FY25 is roughly 4,800 crore. Where does this go, say in 2 to 3 years? Because the kind of growth clip you're growing at currently, just trying to understand sustainability of that over the next 2 to 3 years, along with this new agreement with Spyro, which should contribute roughly 10% of top line.
So Harsha, please understand the kind of opportunity that we are sitting on is very large.
Right.
And we are hopeful that we should be able to grow our company at a CAGR of almost around 25 to 30% going forward for the next 3-4 years as well. For that also will require a lot of new capacities, a lot of new funds will be required. So we are very bullish on all the product categories. So I think the revenue guidance looks quite robust for the coming 3-4 years as well.
So what does that mean? Should we expect 50% plus kind of growth clip for the next 4 years?
As I told you, around 30%, 25 to 30% is a kind of CAGR that we're looking at for the upcoming 3-4 years.
Sure.
Now, Mr. Gupta, as my colleague pointed out, you have raised your guidance in this particular quarter on the upside, and it's a very strong suggestion to the market that you're seeing strong growth. I just wanted to understand which segment this will be coming from, because I see that the product segment revenue is also up, like the total revenue has grown from roughly about 4,200 to 4,800. That's the total revenue guidance that you've increased. That's coming from the products division. So just wanted to understand, because AC is a very seasonal business. We see that the first half of the first quarter of every fiscal year is very strong. So that behind, I just wanted to understand what are you currently seeing, because the inventory level was very low for air conditioners going into FY25. And while the first 2 quarters have seen build up, I just wanted to understand what are you seeing in the market currently that you've increased your guidance, And secondly, which segments do you see? Do you see that both ACs as well as washing machine, which segment will have the higher share going forward in terms of growth for this fiscal year based on this upped guidance as well?
So Puneet, please appreciate we have revised our guidance upward based on the kind of order book and the forecast that we have for the products that we manufacture, whether it's air conditioners or washing machines or air coolers and televisions. So we have a very strong order book, and we are confident that the revenue guidance that we have given, we will be comfortably achieving that. The major, definitely regarding the ACs, AC has seen a very stupendous growth in last couple of years, and we are hopeful of continuing the similar level of growth in the coming year as well. The kind of, if you see the channel inventory also right now, it is not very strong. During the Diwali season also, the AC sales have grown very, very strongly. And going into the summer season, we are hopeful that we should be able to continue at a good growth rate for AC. Wash machine also, we are expanding our capacity. We are onboarding quite a new clients as well in our washing machine business. So we are hopeful that the product category in overall our business will be growing at a rapid clip.
And Mr. Gupta, what about your margin profile? As you grow at this very brisk pace, is there upside on margins as well that you see, and where will that upside come from? You've guided that it will be higher than 10, is my understanding. Please correct me if I'm wrong. Is there possibility of it going to 11 or even 12, given the kind of growth that you're clocking?
So Harsha, we would like to stick to the guidance that we have given as of now.
Sure.
So we have already done some kind of number crunching, and we would like to stick to that. Please understand the competitive intensity is something which is very dynamic landscape which keeps on changing, and we might have to respond to that. So we will not like to be complacent and be overconfident on the margin profile. For us, the revenue and the business is important. At the same time, we need to see how we are able to maintain a decent ROC, ROE returns for our investors as well.
Okay, so 380 crore roughly is the capex. Just I want to try and wrap that as well. Everything from internal accruals as well as your fundraise, etc., should take care of capex, no fresh debt.
So 380 crores of the capex that we have planned for FY25, which is almost like we are completing that. That was already planned based on our previous QIP, and some amount of debt we have taken in this. So it is already in line, and most of it has already been completed.
Right. So that's with regards to where the company goes in terms of PG Electroplast. Clearly, if you can just pull up that stock on the screens and see what the counter is doing in trade, 1.2% lower is where the stock is trading at.